Happy Wednesday, everybody. It's Scott Davis with the Davis team here at Cross Country Mortgage. So we're back with another Wow Wednesday, Words of Wisdom Wednesday. Today we're going to talk about points, kind of in conjunction with closing costs, but why is it good to pay them or why is it good not to pay them? There's pros and cons with everything. So today is just going to be just a tip on what's good for, whether it's good to pay those closing costs or not. A discount point or an origination point, when TRID hit, it kind of redefined what origination is. Origination now is everything that it costs to originate a loan. So it could be underwriting, processing, extension fees. If some lenders charge junk fees, which we do not charge junk fees at all, by the way, that's all part of origination. So any discount is to discount the rate. So a point would be 1% or any percentage of the loan amount, not sales price, but loan amount. For easy math, a $100,000 loan amount, a 1 full point would be $1,000. A half a point would be, that's right, $500. So what we do is we figure out what your rate would be without paying that point. So what your rate and payment would be. So for instance, if your rate is 3% without paying a point, and your monthly payment, again, I'm gonna make these numbers up right now, is $600 a month, and you pay a point and it drops it down to 2.875, and your monthly payment now is $500, and again, these are made up numbers, it'd be $100 worth of savings. So you take the cost of $1,000, you're saving $100, you divide that 100 into that 1,000, and it takes you 10 months to recover that cost. That's how you figure out if it makes sense to buy a point or not. If it makes financial sense will depend on how long you're going to be in the property. So if you're going to be in the property for 3 years and that point is paying for itself within 10 months, it makes a lot of sense to pay it. It's a tax deduction in this tax year. So we don't count that personally. I just count what the actual savings is, so we can see what your return on that investment is. If it's going to cost you $3,000 and it's going to save you $30 a month, it may not make sense, and you're going to be out of that house, within a year or two. It might not make sense to pay any points at all. Take the higher rate, keep that money invested somewhere else where it's making a better return on what your mortgage is. Mortgage rates are still anywhere from 2.75 to 3.375, depending on loan product, your credit, and different things. That's still a historically low rate, even within that 5/8 of a window, just over half a point window. We're kind of going up and down within that rate field currently, and by currently I mean at 4:49 on a Wednesday. It's actually Tuesday when I'm filming this, but I'll say Wednesday. So that's really kind of the down and dirty as to the pros and cons of paying points and if it makes sense. For further clarification, please don't hesitate to give me a call or shoot me an email at scott@thedavesteam.com. My phone number is 703-209-3138. And please hit that subscribe and like channel. I really have no direction where it is, but I'm sure you can see it once you get this. Thanks, guys. Have a great Wednesday, and I'll see you next week. Call me if you need anything before then. Bye, guys.